Today, Bitcoin is in the red to kick off the month of December. Michael Saylor's strategy announces the formation of a nearly $1.5 billion US dollar reserve. And John Wang, head of crypto for Kalshi, explains the company's launch of tokenized predictions on Solana. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies retreated sharply alongside stocks this morning as volatility continued into December. Now, as of noon Eastern, Bitcoin dropped nearly 8% to the $84,000 level after falling to a fresh low of $83,857 this morning. That's Bitcoin's lowest level since April. Ether cratered more than 10%, and Solana's SOL token dropped even more by 11.5%. Bitcoin and Ether are now on pace for their first negative year since 2022. The fresh slide in digital assets coincides with a broader risk-off sentiment at the start of a new month. Liquidations and macroeconomic concerns, including uncertainty over a possible rate cut in the U.S., continues to weigh on investors, while doubts over exaggerated valuations and AI-related names contributed to last month's volatility. Okay, let's talk about the top stories. Strategy is forming a nearly $1.5 billion US dollar reserve. According to the news release, the reserve was established to support the payment of dividends on its preferred stock and interest on its outstanding dividends. Now, the funds for the reserve were raised through the sales of common stock, and the company initially plans to keep enough money in the reserve to fund at least 12 months of dividends. Strategy says it plans to add to the reserve over time with the goal of covering 2 years or more of its dividends. Also, the company announced it slashed its full-year profit and Bitcoin yield targets due to the recent big drops in Bitcoin's price. Saylor announced on X this morning that the firm had added to its Bitcoin holdings, bringing its total stake to 650,000 tokens. Now, as of noon, Strategy shares dropped more than 11%. Next, European asset manager CoinShares is rethinking its U.S. strategy as it seeks to debut on the NASDAQ. According to SEC filings from last week, the firm requested to withdraw its applications for Solana staking, XRP, and Litecoin ETFs. Its CEO Jean-Marie Mognetti issued a statement the same day these requests were filed on CoinShares' U.S. strategy, especially as it relates to single coin ETPs. Mognetti says that while the company built its business around single coin ETPs in Europe, the asset group has been rapidly commoditized in the U.S. with consolidation around large-scale players. He says that over the next 12 to 18 months, CoinShares would introduce other products in the U.S., including those tied to crypto equity exposure beyond just tokens, thematic baskets, and actively managed strategies combining crypto with other assets. Despite this withdrawal, a slew of spot altcoin ETFs hit the market in recent weeks, including those tied to XRP and Litecoin. All right, for our main story, predictions market platform Kalshi is making a big bet on Web3 technology. In November, it announced launch of tokenized predictions on Solana, and separately, a partnership with Coinbase Custody to secure USDC on its platform. To weigh in on some of these efforts, Crypto World's Liz Napolitano spoke with John Wang, head of crypto for Kalshi.
John, thanks so much for joining us today. I wanted to get a little explanation from you about what you guys are doing with crypto, what this kind of deepening of your foray into digital assets means for Kalshi, and why you've partnered with Solana to bring this on-chain application layer.
Yeah, super excited to be here. Thanks for having me on. At Kalshi, we're super excited about embracing crypto. I think just like crypto, prediction markets are a new asset class, and there are a lot of things that are not possible to do without crypto rails. And so building a developer platform and embracing the billions of dollars of liquidity on chain is something that's a top priority for us.
Now, can you talk a little bit more what it means to have that access to, billions of dollars in crypto holders' liquidity for Kalshi? How does that affect, how you guys operate, processing transactions, price, all these things that traders care about?
Yeah, I think there's a lot of compatibility here. Kalshi is a 24/7 exchange, and your prediction markets are kind of this burgeoning frontier of finance and this new asset class. And for crypto users are people that live and breathe new financial technology on a day-to-day basis. And so we think there's a lot of synergies here. And ultimately, there is this huge pool of capital on chain, both on chain and globally, that is accessible via crypto rails, super frictionless and seamless way to get capital onto the exchange. And so We think that this is like a way that we can kind of broaden the horizons for both industries.
Got it. Now, the launch of this application layer, this on-chain application layer, comes at a really interesting time where federal regulators are kind of ratcheting back regulations on the crypto industry, on prediction markets, on other kind of, fintech platforms. I'm wondering what kind of opportunities that gives you guys in terms of what you guys want to launch, how you guys are thinking about, deepening your push into crypto. Is there anything else besides this on-chain application layer and this partnership with Solana that you're thinking about doing, offerings that you have ahead in terms of like tokenized assets that are now possible because of this new, less limiting regulatory climate?
Yeah, I think Kalshi is in a great position because really it's the kind of newest next generation full stack regulated exchange. We haven't seen something like this in terms of this model, in like basically decades. And so it's basically like Wall Street DNA moving at Silicon Valley speed. And I think the regulatory environment is really favorable for the next few years. I think this administration has taken a very pro-crypto, pro-innovation approach to things. And so, just with the CFTC, we've been seeing like a lot more pro-crypto adoption and, regulations opening up for like a tighter blend between traditional finance and decentralized finance, and also a tighter blend between the SEC and the CFTC.
On this Solana-based, application layer, you have Jupiter and DFlow. They're acting as sort of institutional clients that will bridge the off-chain order book of Kalshi to on-chain liquidity. How come, you have this like off-chain order book, and then you have these transactions taking place on-chain? Like, why not bring the order book on-chain as well? Like, how do you kind of decide, I guess, what to leave off-chain and what to leave on-chain, and how does that let's say, limit how crypto native the experience is?
No, I think from an experience standpoint, there's no like real trade-offs here. You can kind of get all the benefits you would like want with the tokenization model, and the implementations that sort of these infrastructure layers have built, Jupiter and DFlow, is quite elegant on Solana. It's instantaneous speed. I think ultimately the moat for any exchange is liquidity. And Kalshi is the only prediction market in the world that doesn't fragment its liquidity between on-chain and off-chain and US and international. And so I think this tokenization model is quite an elegant way to achieve this compounding of liquidity, which leads to a bunch of network effects. And the reason why, I guess most of our liquidity today sits off-chain. The reason why that is because you can really only get like these massive broker integrations with your Robinhood and Weebles and Prize Picks of the world that Kalshi has with a off-chain model and a compliant regulated model. And so I think this is actually the best way for the crypto world to interact and tap into the largest liquidity layer for prediction markets.
Now, I want to return back to that theme actually of regulation and compliance. When it comes to users who are accessing, tokenized wagers through Solana, will they be KYC'd? Are there different requirements for, a user that comes in through Solana wanting to, place wagers on prediction markets on Kalshi versus those who are going directly to the exchange?
Yeah, so these are contracts that are offered by Jupiter and DFlow. They're hedging and using Kalshi liquidity to power their infrastructure. The users themselves and the front ends that build on top of this layer are it's sort of like it's up to them to decide these sorts of things. And like Kalshi's role here is purely to act as like a liquidity layer.
I've been seeing a lot of buzz on crypto Twitter that, people kind of scorned Kalshi. They've said, they've criticized you guys and said, oh, you guys have been buying up all like the key opinion leaders in crypto and bringing them on chain and bringing them to Kalshi to kind of build out like this on chain initiative and other, pushes into crypto to compete with Polymarket. And they felt like, it seems like some people felt like it wasn't as genuine, or that, you guys hadn't really done like the work to engage with the crypto community and really like learn where they're coming from and kind of meet them where they're at and really learn the culture. Can you speak to that as somebody who was brought on to lead Kalshi's crypto initiative? Do you think that's fair, like a fair criticism of what you guys are doing?
Yeah, I've been in crypto my entire life, entire professional life, really. Been in crypto since I was 16, and I live and breathe this industry. When I was choosing, between like which prediction market to kind of join just a few months ago, it was definitely like contrarian to pick Kalshi. I think, the company didn't start as a crypto company per se. But I think we've done a really great job so far at bridging the gap. And I think if anything, it opens the sort of horizons of crypto into like more aspects of like traditional finance or tech that Kalshi draws its roots from. And so far we've built out a crypto team. We've had partnerships with all the largest of crypto companies. When it comes to like the affiliates, we work with affiliates that really genuinely want to work with us. Crypto affiliates, they're very, very picky on like what they're sort of authentically willing to say. And so it's not really like a matter of like being able to just like force them. And so it's actually just like a matter of convincing them that, or like sort of like showing them what we're trying to build here. And when it comes to like the future of Kalshi crypto, I think we have like a long way to go still, but I'm very excited. And just this week, I think we became the sort of like largest project in crypto as an industry in terms of like mind share. And so it seems like we've made a mark, and now we just have to deliver it with it on product.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.